All right, welcome back to Robinhood Stock Market Watch List group. My name's Carlos, and today's October Sunday the 16th, and this is our stock market meeting where we're going to go over a lot of events as well as some educational cool tips and tricks, and there's been other requests to kind of go over some of our moving averages and indicators and things like that. So we'll kind of do that towards the end of our meeting, but for now let's kind of look ahead of what's kind of going on and what may happen based off of certain scheduled events. And so one of the most important things that we like to look into first that has the biggest impact on our stock market is economic reports. And so one of the best places that we look for that is on an app or a website called investing.com. And so with configuring some things, we can easily get there. On here, we just need to get to the economic calendar when we're on the website, and we need to filter some things because there's just going to be a lot of gibberish at first. But when we click on the filters icon, we want to clear everything. There's only two things that we need to see, and that is putting a check mark under the United States, and then under importance you'll see a 1 star, 3 stars, or 2 stars and a 3 stars. We want to put a check mark under the 3 stars because we're basically telling the system that we want to see everything that'll have the biggest impact on the United States stock market. And so we'll click apply, and it'll refresh, and we want to click on this week. That way we can see everything that'll have the biggest impact on the stock market. Now there's we will talk about the earnings releases that are scheduled. There's a lot of them. We're basically have started a whole new earnings season, so that's always really big and very overwhelming, and so that's why we don't usually typically see a whole lot of economic reports scheduled. Normally we see a Tuesday, Wednesday, and a Thursday, sometimes maybe a Monday or a Friday, but we just have 2 days. So with Wednesday, October 19th, we have the buildings permit for the month of September. And it's important that you understand the time that this is going to be released. And the advantage that we have to this strategy of due diligence is that the news companies are doing the exact same thing. And so when this information is released, we're getting it the same time that they are. But it takes them time to create an article or a notification, blast it out on their app. And by then, the time that it could have taken from this information being released, almost spot on, until the news alerts go out, it could be 5, 10, 30 minutes or an hour later. And so that gives those people that are relying on the news a disadvantage. And so that's why we're kind of like, we kind of have to act like reporters or journalists. We have to kind of think like that a little bit. So we have to always know what's going to happen before it's going to happen, and that gives us an advantage. And so time-wise, this is saying that this is scheduled to be released at 8:30 in the Eastern time. If we're looking at it on the website, we can easily change it so that way it's in your time zone. But when you're looking at it on your phone or your tablet using the mobile application, it will automatically adjust it to your time zone. And so it's important to know if it's scheduled to be released before the market opens or after the market opens. In this case, this is scheduled to be released 1 hour before the stock market opens. So that means it's going to greatly affect the pre-market. So it just depends on your strategies on what you're trying to do, especially if we're trying to straddle. Volatility during the pre-market is definitely something that we're looking for. Now looking over it at the right side, it's very, very important that we pay attention to the forecast versus the previous. because Wall Street and all the other investors are basically going to rely or really use their strategies based on the forecast. So the forecast is saying that it's less than the previous report and to expect bearish characteristics. Now, if the forecast was higher than the previous, then it's the other way around. We want to expect bullish characteristics. And so, but if you don't know what these reports are, feel free to click on it. A new page or tab will appear, and it'll provide a very brief description on what it is and how it'll affect the stock market. For example, building permits measures the change in the number of new building permits issued by the government. Building permits are a key indicator of a demand in the housing market. A higher than expected reading should be taken as a positive or bullish for the US dollar or the stock market, while a lower than expected reading should be taken as a negative or bearish for the US dollar or the stock market. And so this is just really important, especially when it comes to the housing industry. That's a really big thing right now because of, you know, the high interest rates and inflation and blah blah blah. And so so it's anticipated that we're having a decline in that could continue to scare investors and whatnot, and we can see, you know, a little sell-off or something, you know, as well as knowing, which we'll talk more about, the quantitative tightening, which is when the government sells a massive billions of dollars worth of stocks. We'll look into the schedule here in a little bit, but primarily they've been executed, or they're scheduled to be executed on Tuesdays and Thursdays. And so, but they're doing it at different times. Sometimes it could be in the pre-market or sometimes in the middle of the day, and sometimes it can get really tricky and execute their selling order during after hours, like right the last second, even where we don't even notice. And so that has an effect on the next day. So for example, if Tuesday, if we don't see that the quantitative tightening has been executed, and that means, you know, that they're executing it during after hours, and that will greatly affect Wednesday. And so they have this, you know, they're no dummies. They have, you know, they do things for a reason. And for example, they may use that little trick to make a bearish day, a scheduled bearish day, more bearish, kind of like putting fuel on the fire. And so, but we just have to know what's going to happen before it's going to happen by knowing, you know, a few different these scenarios. And so the next report is these crude oil inventories report. Now, we don't see a forecast right here yet, but there will be. It could be later today, or it could be you know, tomorrow, you know, Monday during pre-market. So we'll have to kind of see, are they forecasting it to be higher or lower, whatnot. But the time-wise, very important. This is 1 hour after the stock market opens. Now, the most activity during the stock market day is during the first hour and the last hour of the day. And like I've mentioned, these things are scheduled and timed perfectly for specific reasons. And so they're trying to make Wednesday very, very volatile, and during the pre-market and right after opening, as well as 1 hour 1 hour after opening, keeping more volatility, the momentum going. And so I mean, expect a lot of volatility on Monday. However, going to the crude oil inventories, now last week it was in the positive by a lot. We have not seen it this high in a long time. 9.88 million barrels. There's something going on, but it basically means that, and this is bearish. There's usually a couple different. Most economic reports need to be high. They need to be up. The numbers need to be up. You know, it only makes sense. But there's two reports that need to be down. That's the crude oil inventory levels and the initial jobless claims, which is the unemployment report. And so with the crude oil inventory levels, if they're down, that means people are driving, they're spending money, it's helping the economy. If it's up like it was, that means that people are not driving. It's not helping the economy. It means that something's wrong with the economy. And as well as some other things. And so but normally when we see a big jump in either direction, we see a big bounce. And so if the report was up, which would have been bearish, we should expect the next report to be down, which will be bullish. So we could see the morning open in the red, but maybe it could turn green. It just all depends on the quantitative tightening and everything. If there's a lot of quantitative tightening, then that may overpower what bullish news that there might be. So it just kind of depends on that, as well as a few other things. But yeah, this is just really, really important. But because of the way the oil prices have been and the prices of gas, I think we're going to start seeing this algorithm happen again, where most Americans get paid every 2 weeks, and they're going to their favorite gas station with the least expensive fuel, and they're filling up and trying to make it last for 2 weeks. And that's why they're not driving as much, because they're just trying to drive at the essential places, like going to work or the grocery store. And so we're going to see where people are filling up 1 week, but they're making it last the next week. So we're not seeing very many people filling up. So we're going to see this really, really high report 1 week and a very, very low report the next week. That may continue with, again, where the oil prices are being in that $80, almost $90 a barrel range. And so, but yeah, we'll have to come back to look at the forecast, throughout the day, or even tomorrow morning before the market opens. Thursday, on October 20th, at 8:30, 1 hour before the stock market opens, is the unemployment report. This report is looking like that it's forecast to be higher, which is bearish. So we can easily anticipate that Thursday could also open in the red. And Thursday is also scheduled to be another quantitative tightening day. So it's another day where Wall Street is going to be bracing themselves. And so again, bad news is good news. It just all depends on what happens. As long as we know what's going to happen, we can take advantage of it. If you guys aren't into stock options, now is a great time to be in the stock options, because we have calls and we have puts. Calls, we bet stocks go up. Puts, we bet stocks go down. And then straddling is when we utilize both at the same time, because you can only lose what you have on one side, but your gains on the other side are potentially unlimited, just depending on how you utilize things. Now, and that's why we implement several guidelines that really help minimize the risk and increase the reward. And so, and that's why it's important that we, follow, these certain guidelines to make it, simple and easy and beneficial. So the next report is the Philadelphia Fed Manufacturing Index for the month of October. This is also scheduled to be released 1 hour before the stock market opens. It's forecast to also be down, but down a negative 5%, or 5.0. Where the previous report was down even more. But the main thing I think a lot of people are going to be focusing on the most is the existing home sales, because the existing home sales is like used homes. They're the existing homes that are already out there. They hold the majority of the sales, versus new homes is usually like 500,000. So those are nothing compared to under 5 million homes. And so this report is scheduled to be released 30 minutes after the stock market opens. So this is really going to continue a lot of momentum. And you look at the forecast, it says 4.69 million, which is less than the previous report. So we're expecting more bearish characteristics, and hopefully they execute quantitative tightening on here. And a lot of times they'll do that right around certain scheduled events, and then you'll see this massive drop. And because what they're doing is they're hiding quantitative tightening. They don't want us to really know about it, and so they'll blend it in. The news media will create some excuse to making it why the day was so bearish, and so they won't say, oh, because it was quantitative tightening, the government sold $5 billion worth of stocks, or $20 billion worth of stocks, or whatever. And so and I'll show you, now that we're done with the economic reports here, the schedule for the quantitative tightening. And so again, we are let's see, today's the 16th, so we are for this week, we're scheduled right here. So on Tuesday, it is scheduled that the government will sell about $5.8 billion worth of stocks, and then Thursday they're scheduled to sell $13.9 billion worth of stocks. They're just trimming the fat off the stock market. They're doing a hell of a good job. But look at, I mean, it's just, when we had quantitative easing in 2020, when the government closed down the economy for 3 months, they started buying billions of dollars worth of stocks, and they had a schedule just like this, and but in a different location. That's why it makes it hard to find this, because they have to disclose it, but they don't have to talk about it. And so but it's nice that if we can find it, that way we know what's going to happen before it happens, and as well as learning their tricks and stuff. But looking at the billions of dollars, we can also look at this as a volatility level of how volatile, how bearish is that day going to be. And we can see that Tuesday is not obviously going to be that bearish compared to Thursday, like what happened this last week or the week before that, and so on. But we can also see coming up ahead in November 3rd, I think this is going to be the most we've seen sold in one day. So this is going to be a massive amount of bearish volatility, and it's hard to imagine, because this goes all the way into November, and it seems like they are updating this. This did at first used to end in August, and then they threw in September, and now we're seeing in October. So they're extending it, but they're very. I mean, now is very, very aggressive, because they're doing it twice a week. But after the year, it'll then eventually turn into once a week, and then it'll turn into once every 2 weeks, and then it turns into once a month. And that's going to be right around May. That's when we're going to see where investors are beginning to see the light at the end of the tunnel. And with other events going on, investors, Wall Street, they're going to want to quickly recover the stock market. And so, but it's just going to be a downhill up until the end of spring. And towards the end of spring, that's when we'll start to see the market incline. But for now, it's going to be a very bumpy road. But as long as we know what's going to happen before it happens, we can take advantage of it by utilizing stock options. And so let's take a look at earnings. Anybody have any questions about quantitative tightening or any of the economic reports? Everything makes sense. You can feel free to unmute if you need to talk. If you don't, I'm assuming everything makes sense. As DJ Quick says, if you don't make dollars, you don't make sense. So we'll move on to the earnings. So under our group, we have featured, and I always save everything there. And these are very, very highly anticipated earning releases. And so this is our schedule for this week, for Monday, Tuesday, Wednesday, Thursday, and Friday. Just a lot to name off. But I mean, every day it's going to be something major, and they also affect each other in all the industries. So they're all just going to be kind of very volatile. And so, and I post this every Saturday once it's available, and then I also post the top 10 highly most anticipated release earnings. And so a Tesla, which is scheduled to be released Wednesday after the stock market closes, the company's earning release has a 65% expecting an earnings beat, and that's about average. That's, like I said, that's average. But let me show you something else. As we're talking about Tesla, I'm going to upload something here. I have to find it here. Give me a minute here. But it's I don't know if you saw the tweet of their quarterly earnings and or not quarterly earnings, but their deliveries, sales and deliveries. And so I just uploaded it here. So right here. So this was uploaded on October 2nd. Tesla delivered 342,830 vehicles in the third quarter. All-time high with the total third quarter production at 365,923. That is huge, absolutely huge. It used to be about 300,000, so that's about 100,000 cars a month. I mean, that's huge, which is just weird how they can just do that and just pump them out. Unlike the rest of the automotive industry, where they do it for a couple months and then they close the place down, and it's just weird. But I mean, they're just hitting records, and so just know that with that in mind. But manipulation can happen at any time. They could say, "Oh, we had a great quarter, but we expect that the next quarter isn't going to be that well." However, they have several new factories that are open now as of the last year, and they're still building and adding onto them, and so they're not at their full potentials yet, and so they easily have more growth that they can. But again, the EV market is slowly flooding itself, and when you see that, you just see values kind of stabilize. And so but yeah, 65% is easily average. Any higher than that, I would anticipate that being above average, or any lower would be below average. So it's good to see that. Unlike lately, we've seen a lot of other stocks that have been much lower than that. Option traders are pricing in around a 9.8% price movement in either direction, where normally it moves around 5.5%. So we do anticipate a lot of volatility with this one, especially with what we were just talking about with its quarterly sales and deliveries, and productions and whatnot. And so Bank of America is expected to release their earnings report on Monday morning. So tomorrow morning, the company's earnings release has a 39% expecting an earnings beat, which is terrible, definitely below average. Option traders are pricing in around a 5% price movement, which is more than double compared to what it has done before. And so Netflix is another huge, highly anticipated one here that is going to be all over the news. So Netflix, which is scheduled to be released on Tuesday after the stock market opens, Netflix's earning release has a 32% expecting an earnings beat. Now they have not yet started, or maybe just started their commercial advertising thing. That way they can try to benefit more through advertising, but also offer cheaper rates, trying to encourage new or previous subscribers to their service. And so I just don't think that has yet really affected them financially yet. And so and that's why the percentage is low for now. But as we go into furthermore into the fourth quarter, that could change later on. But for now, 32% expecting an earnings beat, which is not good. Or the opposite of that would be a 68% expecting an earnings miss. So option traders are pricing in around a 13% price movement in either direction, but 68% is more likely it's going to go down 13%, or 32% is more likely it'll go up that 13%. And so but with this kind of volatility, with option traders, we can straddle, but only as a lottery play. Anything that has to do with options and earnings, we must consider that as a lottery play, which means that an investor must invest light, not heavy, because in case something goes wrong, like let's say it's manipulated, so there's some weird glitch or something, and it becomes flat. It doesn't move anywhere. It's right around 0% or 1%. The implied volatility crush, or also known as IV crush, will greatly reduce the value of both the calls and the puts, regardless. And it could be a losing situation, and based off of some heavy manipulation and glitches and so on and whatnot. And so but with this kind of volatility, it's very, very unlikely that can happen, but it's important that we watch for glitches, like meaning maybe the financial earnings were released during the market hours, which is not supposed to happen. It's like a leak. It was somehow accidentally leaked out there to the public, and all of a sudden we see this massive drop, but then it begins to recover. But then after close, when the reports are supposed to be reported, there's no movement. So now the whole thing is just screwed up. And so that is a glitch. When glitches happen like that, the strategy now becomes invalid, or what you were focused on becomes invalid, and it's time to abort and to re-strategize on something else. That's why we have certain strategies that we always invest primarily on, heavy on, such as like straddling Apple or Amazon, Tesla, AMD, or Nvidia. And so, but these are our lottery plays where we invest lightly. Now, if you're more certain that it will go into your a certain direction, you don't have to straddle. Like I said, it's a lottery play. If it doesn't work out, it's money that you're not going to miss. And so, but if it does work out, if you decide to go with puts, because again, 68% puts are in your favor, and especially if it moves 13% or more or less, hopefully, and we could even move 20%. That's going to be a huge gain. And so, just like a lottery ticket, we don't always expect to win, but when we do, we can definitely win some pretty big gains from it. And so, but that's why we have to consider these our lottery plays, and we have a lot of volatile ones that are scheduled to be released this week. And so Charles Schwab's is scheduled to be released also tomorrow morning, Monday, October 17th, before the stock market opens. The company's earnings release has a 37% expecting an earnings beat, which is not good for them. As well, option traders are pricing in around a 6.5% price movement, which is a lot more than what it used to be. Usually they move around about 3 to 4%. Goldman Sachs has they're scheduled to be released on Tuesday morning before the stock market opens. The company's earnings release has a 38% expecting an earnings beat. Option traders are pricing in around a 5.5% price movement in either direction. Then we have Johnson & Johnson. Johnson & Johnson is scheduled to release their earnings report on Tuesday morning before the stock market opens. The company's earnings release has a 55% chance or expecting an earnings beat. Option traders are pricing in around a 3% price movement, where normally they move right around 1 or 2%. They don't move much. But then we have Bank of New York, which, let's see, they are scheduled to release their earnings report on Monday morning, so tomorrow morning. They have a 31% expecting an earnings beat, while option traders are pricing in around a 6% price movement, which is about twice as much as what they normally move. AT&T is scheduled to release their earnings on Thursday morning before the stock market opens. The company's earnings release has a 32% expecting an earnings beat, which is probably one of the lowest I've seen with AT&T in a long time. Option traders are pricing in around a 5.5% price movement in either direction. United Airlines. Well, last week a lot of the airlines did great. In fact, the airlines were the only things that were green last week. United Airlines is scheduled to release their earnings on Tuesday after the stock market closes. The company's earnings release has an 86% expecting an earnings beat, which is the highest out of any other earnings report this week. Which also means that they have a 14% expecting an earnings miss, which is the lowest possibility chance of any earnings release this week from missing. Option traders are pricing in around 8% price movement in either direction, where normally it moves around 6%. And so the news, as well as Wall Street investors, are definitely going to be keeping a close eye on this one, because this is a no-brainer. Verizon is scheduled to release their earnings on Friday before the stock market opens. The company's earnings release has a 59% expecting an earnings beat. Option traders are pricing in around a 5% price movement in either direction. And so it's also really important that we look into the top 5 things to watch. That is, this report is revealed or released every Sunday morning, so it's very, very important that after we do our due diligence that we look at this, because they kind of help do the due diligence as well. So it's just nice to make sure that that we didn't miss anything. And so they're basically saying that the U.S. earnings season gets underway against a background of worries that the Federal Reserve's aggressive rate hike campaign could tip the economy into a recession. Now, speaking about the rate hikes, there are no rate hikes this month, but we do have a rate hike that's scheduled to be on the first week of November, and then another one on the second week of December. So investors will get an update on the U.S. housing market, where the increase in borrowing costs has already led to a cooling demand. Appearances by several Fed officials are also on the agenda. In the United Kingdom, with this Jeremy Hunt guy, his first full week as a chancellor after Prime Minister Liz Truss was forced to fire his predecessor. Elsewhere, third quarter economic data out of China is likely to underline the challenges facing the world's number 2 economies. While in Japan, the yen is back on the intervention watch. Here's what we need to know to start our week. And again, the first one is earnings. So that one seems to be kind of on their top priority list. And the second one was the housing data. And so only because the earnings is all week long, so we're expecting volatility from this all week, versus the housing data comes out in one day, and so that's why they have it prioritized like this. And so the third is the United Kingdom tries to restore calmness within bonds and the markets and things like that in their economy. And then fourth is the Chinese data, which looks like it comes out on Tuesday, and so that'll help create some volatility with our stock market when we don't have any economic reports scheduled for our economy for Monday or Tuesday. And so that'll help out with that. And then so number 5 is the yen intervention, which is another thing that we'll kind of be looking at with Japan. And so again, we've looked through that a lot, so that's really good. But also, it's very, very important that we that as individuals that we always go through this stuff, but also to look at the president and the White House schedule. Now, this, unfortunately, there's no weekly schedule for them because their schedules are created on a daily basis. But the good thing with that is that it's released to us, to the public. And so if you just Google Biden's schedule, there's a website. The first thing that comes up will basically take you right here where we can look at it, and it updates at midnight on Eastern time or at 9 p.m. Pacific time. And so that may give some of us on the West Coast an advantage because a lot of us may still be awake, so we can look to see what is scheduled. And a lot of times, again, like I said earlier in this meeting, a lot of times things are scheduled to happen on purpose to create more volatility and momentum. As we've had economic reports early in the morning, they'll schedule these right before close, like during power hour or during the middle of the day or something like that, just so that way we know how volatile is power hour going to be. If there's nothing scheduled, then it could be flat, and so what happens in these like whether the Biden talks, he could say something that can bring the stock market down or up, as well as the press conferences that often take place, like right here. This one, it looks like was a late press conference or something, or you see press briefing, and it's color coded as well in kind of like a bluish purple or not purple, a greenish color, and so but they may say something that could scare investors or Wall Street as well, or say something that could cause them to create a rally where a lot of people will start buying. Like they start saying, "Oh, we're building factories, creating new jobs, and blah blah blah." That's good, and so that creates revenue and economics, and it's good for the economy. And so, where if they're saying, as well as like if journalists, and that's why we got to think like a journalist, because what would you ask the White House? And we would talk about Russia, the Ukraine war, as well as Kim Jong-un with North Korea and all kinds of stuff. And these types of questions, the public is watching, and the journalists are writing down notes, and they're getting ready to create these articles and blast it out there. And it could take 30 minutes or an hour or hours to get it out there, but at least we're watching it live so that we know what's going to happen, how the market's going. And not only are we watching it live, but Wall Street is too. So we should only do what they're doing as well, so that way we're staying, we're on the same level there, as much as we can with this information. And so that's why it's always important to know what's going to happen before it happens. And if there's nothing scheduled to happen, then the market could be flat or it'll stay wherever that it's at, if it's really low or high. But where like if the market's really high and there's nothing scheduled, then it should stay up there. But the market's high, and all of a sudden we have president delivers remarks on blah blah blah. The market does not like him. And so usually the market will go down if he says anything, and the reason why, he's a bullshitter, and you can't bullshit a bullshitter, and he starts talking, and it just, the market just doesn't believe anything he says, and or whatever he does say or does, it's just making things worse, it just does not like the guy, and so we just have to know the facts and the statistics, and so and numbers don't lie, and so we always have to follow the money and the algorithm, the reactions, and things like that. And so, but yeah, this is a great, very, very valuable bit of resource here as part of the investing.com website for looking at the economic reports, the schedules, and the earnings reports. And so next, we should always look at the options activity. As we mentioned, always follow the money. It's important to always see where investors are putting their money, rather than just relying on words and the analysts and stuff with what they think and feel. We need to see, again, put your money where your mouth is type of due diligence. And so, looking at the options activity on barchart.com, we can see that this is Friday's activity right at close. So this is at the end of the day, but we can see that everything is sorted out by options volume. Now this page shows the whole system all on one page, the top stuff. And part of our rules when it comes to straddling is always straddle at least within the top 5 stock options, and that's typically going to be our Tesla, Apple, Amazon, Nvidia, and AMD. And so these are our most active traded stock options. Everything else is fluctuates, and so but these top 5 are very popular for day trading and swing trading and straddling. And so, but sometimes we can, most of the time we want to straddle 50-50, 50% calls, 50% puts. That's 100%, that's $100 on one side, $100 on the other side, or $1,000, $10,000, whatever. And so, but we can see what the investors are kind of doing. They're kind of either doing 50-50, or sometimes we could see more like a 60-40. If you're more certain that a day will be more bullish, then maybe we can go 60% on calls, 40% on puts. But we just don't really want to go too far over that in case if something happens and that's not in our favor, then we're trying to keep things at a wash or come out ahead. Now, even though it's recommended to buy our straddles, our calls and puts, about 5 to 10 minutes before close, it's recommended to sell within the first hour after the next day, because after the first hour there's a lot more time depreciation at that point. And so and if there's really no price movement after that first hour, there may not be for the rest of the day. So you're just killing yourselves with time decay. You might as well just get out at a wash and repeat the process later on. And so that way you're avoiding the time depreciation. It's like avoiding a fight so you can live to fight another day. And so that is part of that little process. But by looking at these, we can see a lot of them is either 50-50 or 60-40. And so it just depends on what we're looking at. But sometimes we can see something way out of whack. Like we have a 96% put ratio on Nikola. I mean, if we start looking at Nikola News, it doesn't look pretty. I mean, they're going through a lot of financial, legal issues like they were in the past. All of a sudden, I thought that was done and over with, but it looks like it's starting to bite them in the bottom again, and so. But they're not normally on the top of this list, but there's a lot of people betting against them. And so, but we can always look at unusual activity if the numbers are slightly out of whack, or normally it should be around 50-50, 60-40, something like that. But every once in a while we can see something that's a little out of whack like that. Now we can also look at the most active individual calls and puts by clicking on the option volume leaders. So by doing this, it's also important that we also look at the DTE, which is the number of days until it's expired. When we're looking at this on a weekend, it's invalid. It's no longer available, and so going into next week we want to avoid it. So that way we can kind of look at what is currently still active. And so the first one is going to be a Nikola, the one we were just talking about. It looks like there's two of them. Nikola, which is currently at $3.06 a share, but we have a $3 strike price that expires in April 21st of next year, or approximately 188 days from now. Now, the open interest was at 237. It had no interest, very, very little, and all of a sudden, bam, we have 100,000 in fresh volume. Now, open interest, if you're not sure what open interest is, it's basically the total number of open option contracts that have been traded but not yet liquidated via offsetting trades. This means that they've been purchased, but they have not been sold. They're being held. So it tells us what's kind of been going on. So if the previous day only had 200 people holding, and now there's 100,000 people that bought, that means that there is a lot of interest on this. And so this one here, where it's kind of the opposite, where the open interest was higher. So this means that we had 103,000 people that were holding previously, and now we have 100,000. This could be 100,000 bought more, or it could be 100,000 people sold it. They sold this and bought that. And so because Nikola is already in the money, it was $4, now it's $3. People are selling it because, it'd be more ideal to maybe buy the $3 put if Nikola is just going to keep going down. They'll still be in the money and whatnot. But that's kind of what we're seeing here. We're seeing a transition. That's how we follow these numbers. And so going down, we have another Nikola, $3 put, but this one expires this coming Friday the 21st. And so, but they had an open interest of 51,000, but now has a volume of 64,000. So, but the good thing is that the number is higher than the open interest because it's showing more interest, not a loss of interest like this other one. Or it could be a blend. I mean, it's hard to tell, but it's better to assume the worst. And so next one down is Laser, which is a LiDAR technology company. Which are currently at $6.87, but we have a call strike price at $7.50 that expires this Friday the 21st. We have a 52,000 in open interest and now 52,000 in volume, slightly higher than the open interest by a couple hundred, which is a good thing. So I think Laser had plunged earlier in the last week, so this could be a sign of some recovery this week or the next couple weeks, because there's another one right here, same strike price but a different expiration date for the next following week on Friday the 28th. This one only had an open interest of only 555, but now the volume of 50,000. Now, if you're not into stock options, that's fine, but you still have to use this information because it's telling you where people are investing their money. Even if you bought shares of this at $6.87, it gets to $7.50. That could be a 10% gain in a matter of a couple weeks. And so if you just don't want to risk doing options, just don't understand it or whatever, but I mean that's fine, but just understand the difference between a call and a put, where people are putting they're investing their money. We're talking thousands, hundreds of thousands or millions of dollars of people betting that this stock is going to reach a certain price range within a certain amount of time. And so, for example, here's Tesla, which is Tesla's currently at $204.99. We have a $350 call strike price that expires on January 19th of 2024, which would be approximately 461 days from now. Though the open interest is about 42,000, the volume, which is at 40,000, it could be an accumulation. We'll have to see going into tomorrow if the 42,000 turns into 80,000 or 60, 70 or whatever. Otherwise, they're selling, they're getting rid of it because maybe Tesla is going down. They want to abandon this idea. And so, but I don't think so. I think that I think we're going to see an accumulation on the 350 call strike price for January 19th, 2024. And so again, we should expect this number to be higher because $200 is pretty low for Tesla. But again, it's not, because they split twice in a matter of a couple of years. So $200 is really not that bad. But it's still bizarre to see them go from $300 to $200. That's a 30% decline. And I mean, no wonder why we're seeing Elon Musk having a fit over about the. Did you guys know that he's spending like, what is it, 25 or 28 million dollars funding the Starlink for Ukraine? He's been doing that ever since the war started, and now he's asking the U.S. government, hey, you guys need to take over this bill. If he's not saying this, but I mean he's basically saying, since you guys are manipulating the stock market, you're devaluing my company. I'm losing money and trying to help out with this war situation. And if you guys are going to decrease my value and this and that and my market capital, you guys need to pay for this bill. Kind of thing. And who knows? If this is the right path or not. But this is kind of what's going on. I'm sure in his head. And so going down the list here, we have, I'm not familiar with this one, NLY is the ticker, and it's currently at $16.64, but we have a $21 call strike price that expires in November 18th, which is approximately 34 days from now. Open interest only had 22,000, but now it's 40,000. So this is for sure some pure buying activity, because the volume is over the open interest, just showing more interest. And so look at this. There's another Tesla call strike price at $400. That is twice as much as what it is now. Now, we've talked about the quantitative tightening, which begins to ease towards the end of next year, you guys. Now, also the interest rate hikes. We're very, very aggressive now. We could still be aggressive in the beginning of next year. But the interest rate hikes are only scheduled to happen for 2 years. As we get closer to 2024, we'll begin to see interest rate easing, which means that the interest rates will start coming down, and then more people will start buying cars and homes and blah blah blah. And then there's just a way of manipulating the markets and these numbers and stuff. So we could easily see this happen, as well as the whole artificial intelligence robot stuff that we watched the reveal like a month ago or a couple weeks ago. They mentioned that it still could take about a couple more years until they go in full production. Now, they also mentioned that when they do go in full production, they want to sell millions of them, not a few of them, not a handful, a dozen, or 1,000, or millions of them. And so when they get to this certain point, they're going to reveal the full on, the one that we'll be able to order. They'll be able to take online orders and reservations, and they'll still probably be the only company that'll be offering it to the public. And but again, their pricing wise, they did mention that it'll cost less than a car. And so even though we still need, it just depends on what kind of car you're talking about, So it just depends on that. But it's still going to be something that's going to be ordered by consumers, but also with the commercial industry. And so, but for now, we're also seeing a $210 put going into this week that expires this Friday, the 21st, or approximately 6 days. Open interest only had 9,000. Now it's got about 34,000 in open interest. Now, typically when we sort this out by volume, we see a lot of short-term stuff. Now lately, it's interesting because we're seeing some long-term stuff, because we're just seeing a lot of recent activity. People are placing these huge long bets on Tesla. So again, always follow the money. It's important that we look at this stuff on a daily basis, because we'll see things that are normal, that are normally on here, and then we'll see things that are not normal, and these are something we don't see. These are not normal, and so these are, I'm sure that investors are placing their bets that these are going to reach these within this time frame. And so that's why it's always important. And it could be inside information, inside trade, who knows. I mean, there's just things that are happening because it's not on the news yet, and that's the big thing there. As a lot of pro traders say, buy on rumor, sell on news. And the idea is to always be holding before the news is out, because otherwise it's either too late or you're leaving money on the table. So for long-term investors and traders, we want to sort things out by open interest. So if on this page, what we'll do is we'll click on open interest, we'll refresh the page. That way it refreshes the entire system, all calls and puts by open interest. Now we're seeing a whole new level of things. Now we're seeing a much longer days until expiration, as well as the expiration dates. And so looking at the top, Bed Bath & Beyond, which is currently at $4.93, but we have an $80 call. Now we do these meetings every Sunday. We've seen Bed Bath & Beyond start from the bottom, and it trickled up to the top of the list, and now boom, it is number one most highest open interest stock. Now Bed Bath & Beyond, I keep saying this, it's been one of our highly manipulated stocks. It could be the next game stock or AMC or whatever. There's something going on. We've seen this happen with GameStop and stuff. Those stocks were $3, $4, $5 a share. We started seeing weird, bizarre things like this happen, and then boom, all of a sudden we saw amazing things happen, but things fly underneath the radar. This is our radar. We just have to be able to learn how to identify things. That way we can spot them. And so, but yeah, Bed Bath & Beyond has been highly manipulated over in the last several months or so. We lost a CFO that committed suicide for whatever actual reasons, but Bed Bath & Beyond, their prime time is during the fourth quarter, during the holiday seasons, Black Friday, Christmas, weddings, so on. And so as we get into the next quarter, as we get into the financial earnings, they're going to say, oh, Bed Bath & Beyond did great, blah blah blah. But even if you bought these as shares, if it goes from $5 to $10, that's 100% gain. If it goes to $20, that's a 300% gain. $20. And so I mean, this is like a $30, $40 stock all day long. And again, it is highly manipulated. And I think they've had to close some stores, but anytime places, and that may spook investors at first, but bad news again is good news. If places close stores, now the staff is a company's biggest expense, and if they can reduce the stores and staff, they can reduce their expense, which adds to their revenue and their growth. And so it makes the company more profitable, more revenue, financial earnings. And so investors are slowly accumulating this, even though the volume is small. The open interest is growing on a daily basis. That means that they're adding more and more to it because maybe the stocks are going down or whatever. But Bed Bath & Beyond seems to be hovering around this $5 area. Even though the rest of the market's going down, Bed Bath & Beyond seems to be chilling at $5 for some reason, up until further notice, and then boom, we'll see what happens. But just be ready. Next one is PBR, which is currently at $13.95. We have a call strike price at $20 that also expires in January 20th, approximately 97 days from now. Open interest also seems to be accumulating on this one, as it was also kind of down further in the middle of the list in the last several weeks. Now it's second place. But Google, though, Google has been getting some very interesting activity. As we can see, Google is at $96.56. It's worth a lot more than that, and they have a lot more things that they're working on that could greatly increase their value, especially again knowing that the end of quantitative tightening and easing interest rates and all that. Timing is going to be impeccable. They're getting ready because they know that the market is going to greatly recover in a very short period of time once we get into next year's summer. And so and they're getting ready because everything is going to, and you can see that. We can see Google right here, $225 call strike price that expires in January 19, 2024, which is approximately 461 days from now. The open interest is accumulating. We have Meta, or also known as Facebook, which is currently at $126.76, but we have a $420 call strike price that also expires in January 19, 2024, or 461 days from now. Open interest, I assure you, is also accumulating, and so Facebook is trying to, they're trying to add more things to the Facebook platforms, but also the Quest, the Meta Quest, Facebook Quest, the Oculus, the virtual reality headset was a huge success last Christmas. We couldn't find any of the new Xboxes or the PlayStations. They were non-existent, and if you could find them, they were on OfferUp, eBay for twice as much. You would have to spend $1,000 to buy them, and so everyone just decided to buy the Oculus. And it was the largest video game purchase system for last year during the Christmas holidays, and they are working on the next generation Oculus right now. There's trailers, there's previews on it. If you haven't seen it, you definitely need to go to YouTube and watch it. It looks amazing. It helps with more advancements and things. It can also take your living space and add it into your virtual reality, so it's more augmented reality. That way you can kind of see like holograms and stuff in your living room or bedroom or wherever that you're at. Where the current one, it's more black and white, but it's only designed to create your perimeters. That way, as you get closer to your perimeter, you kind of see this artificial security wall. That way, you know not to go past it because there could be a wall there, or physical wall, or an obstacle that you don't want to smash into. So, but they're going to add color and more higher quality cameras and things like that. It's going to be really neat, even to the point where you don't even have to have remotes. The system just recognizes your hand movements and things like that. So it's very, very fascinating, and Facebook can easily get right back up there where and these were the market is just so down right now, and there's just so much more to go that but these values here can easily get back there. And so Ford Motor Company is down a lot right now too. They're down up to $11.67. We have a $15 call strike price that also expires January 20th or of next year, or 97 days from now. Open interest definitely is accumulating. Then we have Bank of America. As we've seen that Bank of America has the financial earnings this week. They're currently at $31.70, but we have a $40 call strike price that also expires this January 20th as well. And open interest, and it fluctuates. These could be people that are selling, they could be buying, who knows, but we do see some other calls and puts, so we could be seeing some straddling activity going on here because they're so close together right now. But with two calls, one put, it looks like it could be more or less 66% calls, 33% puts on that. So but because they all have kind of the same expiration date, and so And then we talked about Nikola, Apple. We have a $140 a put strike price that expires this Friday. So a lot of open interest on that one. So a lot of people are still bullish on, bearish on Apple. Now we have REV, which is currently at $4.12, but we have a $35 call strike price. What a huge difference. Even if it reached $20, that's like what, a 500% gain? That's a huge gainer at that in such a short period of time, in like 3 months. And this expires next January 20th. Had an open interest of about 84,000, and now it has a volume of just less than 5,000. But we do have a $300 call strike price on Tesla, which also expires in January 20th, or approximately 97 days from now. Open interest 78,000, and then Friday's volume was about 3,600. Intel, which is currently just under $26, but we have a $50 call strike price, but it expires in January 19th of 2024. So we're definitely 461 days away from that. But semiconductors are very, very low value right now because they're being heavily manipulated. There's another one right here. We have an Intel $40 call strike price that expires in June of 16th, 2023, or 244 days from now. And so, but we're seeing more puts on Apple. We have a $100 put on Apple that expires in January 20th of 2023, or 97 days from now. That would be crazy to see Apple reach $100, and so we may be seeing an accumulation of this. So going into this week, as we look into this every day, we could see this $100 put strike price continue up the list. So to be determined, and that's why it's important that we look at this daily or even regularly, because this list will update every 15 minutes when the market's open. So, and it's available to you guys. It's free. It doesn't cost anything. And so, and that's why we like looking at it. And there's ETFs that are available there, but ETFs are usually things that day traders like to day trade. They like getting in and out within, seconds, minutes, or whatever. Usually we don't see a whole lot of people holding overnight. And so versus the stock options are usually, we'll see day trading and swing trading numbers, because people will usually hold on, versus ETFs are usually more day trading. So looking at the puts, we can see that the percentages are higher on the ETFs because people are just kind of getting in and out. They're mostly day trading puts on last Friday. And so so stocks are usually more or less a blend of day trading and swing trading. So that's why if you're looking for information going into next trading day, we can see that the majority of investors are bullish going into Monday. So Monday, by 51 to almost 60% are anticipating that we could be opening into green. But again, it's really important to always be straddling no matter what. Never have a call without a put. Never have a put without a call. These are just really important rules that we must always just kind of implement into ourselves. That way we can maintain consistency. And when we are straddling, and when you're learning to straddle, again, it's important that that we buy right before close, and then we trade the next morning within the first hour. And it may seem like a day trade, and we have unlimited of those for those that have an account with less than $25,000. Rather than buying today and selling today, we can buy right before close to sell the next day, because we have unlimited of those until you have over an account with over $25,000. Then you can day trade within the middle of the day. But we have to stick to this primary strategy first, and then we can always work our way up. And so but once we can utilize moving averages, that is what helps provide us our buying and selling signals. we can then begin to sell at different times to maximize our gains on one side and minimize our losses on the other side. And a lot of times, depends on what the market's doing. If the market opened up in the green and then it closed in the red, we can sometimes turn the loss from that one side into a gain, so we can gain on both sides. And that's why it's really, really important that that we always, you know, try to learn new things and master, you know, a lot of these things that we've talked about, as well as the moving averages. Now, some of you have requested that we kind of go over moving averages, so I'm going to move into the my Webull application. So I'm going to pull that up. Now, when I switch screens, it may automatically minimize the screen sharing, and so I'm just going to have to get in there here really quick. I thought I had it. Let's see if I can find it here. Window, Webull. Okay, so I am sharing my my screen. So you'll have to go back into your settings and find my Webull screen. So that way you can see what I'm seeing. And so so a lot of people are always confused on timings, and so we have to know that the 5-minute graphs. We have a 1 minute graph, 5 minute, 30 minute, 1 hour, day, week, month, blah blah blah. The important ones are the 1 minute and the 5 minute graph. The most important one is the 5 minute graph. So if that's the most important one, that's going to be your primary graph to use. Now I use two indicators. I use EMA or EMA. Exponential moving average, because it's more reactive to price changes, unlike any other moving averages, because I'm more reactive. I like to know, I like to react to things quicker than anything else. And so the MACD is basically two moving average lines that are moving together. One's a slower, the other one's a little quicker. These colored bars are the gap distance bars in between the two moving average lines. So they kind of give us a visual effect of certain things, but it's a guideline. It's a guide. And so, but the most important thing is utilizing the moving averages. So right now we're looking at Amazon on Friday. So Friday opens up, everything goes up. Let's say we're straddling, we have both calls and puts, and the market goes down. This is our indication to sell the call, because the price line cut through the three moving average lines. We have three moving average lines for a very, very good reason, because of the crossover signal. The crossover signal is the last and final signal, letting us know that the stock price is trending downwards until further notice. Listen to our indicators, because these are the things that's telling us when to buy and when to sell. So it says to sell the call, hold the put until further notice, until the next crossovers. So we sell the call, and if the market, I think the market was in the green at this time. I don't know if it was in the green here. I think it was here, so it could be flat. So if you sell the call, you're probably at a 0%. There, and the put's probably at 0, but it's still telling us to sell. The MACD says it, the moving averages says it, and to hold the put until further notice. So we hold the put until further notice, and then after 1 hour goes by, it still says to keep holding, and that's fine. You know, that's fine. You know, as long as it's going down, it hasn't crossed over yet, that's fine, because the depreciation is still in effect, but as it's going down, which is creating more value. So it's offsetting the depreciation at that point. Now, if it wasn't, then we want to sell. We want to get out, because maybe it's flat. We do not want to lose what gains we already have. And so, but it kept going down, and it kept going down. It almost came up right here, but it did not cross over yet. And at this point, we're probably getting a little scared, whatever. Scared money doesn't make money. That's another thing we always have to tell ourselves. Scared money doesn't make money. As long as we know the process, we have to stay confident in the process. Scared money doesn't make money. We stay with the system that is in place. And so we do not sell because it did not tell us to. We continue to hold all the way up into here, Now we want to sell. We want to sell, secure our gains. Now we buy at the money or at the strike price. We're adjusting our calls and our puts. And that's why I always say we want to be actively trading, not actively holding. We want to get in, get out, secure our gains, and repeat the process. Because earlier on Friday morning, Amazon, which we would have sold the call when Amazon was right around $113 a share. We would have sold the put when it was right around $107 a share. That's like a that's a huge difference between the two. And so this is how we can maximize our gains on one side and minimize our losses on the other side. Now, most days aren't going to be quite like that. There's a lot more swings in a lot of these days. And so let's look at Thursday with Amazon. So the market opens up and it just kind of falls, but then it starts to recover. And so the MACD is kind of saying the same thing. And so this is basically saying to sell our puts because the market's going to go up. And so that's kind of what the MACD is kind of saying here. The moving averages looks a little funky, but it doesn't actually cross over until right around here. And it was kind of providing a weird little pattern thing here, but the MACD is still saying no, it's going to keep going up, and so this would have been a great area to sell our puts, hold our calls, and then it goes up and then back down, but it hasn't crossed over yet. It almost does. You just gotta wait. Wait. And the MACD says to kind of maybe to sell right about here. Which either way, if you wanted to get out, that you had some great gains at that point, and but it still is kind of saying to hold on until further notice, and it kept going up again, but then it crossed over right here, bam, and it fell, which is a lot higher than some of these other areas. But with the time depreciation now. Selling here would have been the same if you would have, sold over here where the MACD is. So it's almost like you might as well have just sold the call over here, because the time decay would have just kind of ate you up a little bit right here in this area. And then you just buy your straddle again right before close. And then so looking at Wednesday, there's just a lot more signals now. And so, so with Wednesday, we can see that that there really isn't a crossover until, let's see, 10:30. So almost 2 hours after the stock market opens. So, that may have been a day where, it would have been just best just to get out at a wash and then repeat the process later. But because throughout the day, with what little activity there was, it was just going to decay. And so that, and then again, repeat the process. And so that's really the ultimate way to kind of, utilize this. And you can always experiment with other indicators, but the most used indicators are going to be your moving averages and the MACD by the majority of investors and traders. And if you're not utilizing this, it's highly important that you start. And able to get different results, you have to try something different. Otherwise, if you keep doing the same thing, you're going to get the same results. And so when I had discovered moving averages many years ago, I felt like I found a gold mine. And I just needed to learn it. I needed to know everything about it. I needed to know how to benefit from it, and I needed to practice it. But I didn't want to practice moving averages when the market was open, because I felt like that was like the playoffs or something. You don't practice during the playoffs or when there's a very important game, like a tournament or something. No, we practice when there's time to practice. And so I decided to utilize cryptocurrency as a practicing field. And so because we can utilize these moving averages for cryptocurrency, we can trade on other platforms, especially on Webull or Robinhood. So that way we can practice buying on different signals. And so so you just kind of have to experiment with different things, whether you're doing your 1 minute or 5 minute graph. You'll notice if you're doing your 5 minute graph that you're kind of in and out like about every hour. Because cryptocurrency never closes, there's not that kind of volatility that we see in the stock market during an open and a close. And so the volatility is a lot less, but you can practice with real money that will have a psychological effect on you, which is something that we need to practice, controlling our emotions. And we have unlimited day trades with cryptocurrency, and with no limitations on dollar amount. You can trade $1, $10, $100, $1,000. There's no limitation. And so, but it gives us more practice. It gives us more time, more hours, and more confidence. Because the more confident we are, the better trader and investor we become. And so, and that's why it's important that we always improve and always learn, because the more we learn, the more we're going to earn. And so and it's just a matter of configuring your indicators, your settings, and everything. It's really easy. If you ever need help, we are available 24/7 as a group. We are here to help you and everyone. Our goal is everyone's success. And so no question is a dumb question. I know a lot of people kind of are afraid to say something. That's why you're spectating or watching and observing. But the only way you're going to learn is by asking. And there may be some people that may be maybe irritated by repeated questions, but a lot of us are not. We are very good, professional, people here that understand, new people that come and go, that become successful, and then because the ultimate goal is for you to become an independent, successful investor and trader. A lot of times when we do our trainings and meetings and stuff, people find their fortune, and then they're on their own. And so, but a lot of times, a lot of us like to stick together because we are a phenomenal team of investors and traders that specialize in something different. And so that's why it's good that we kind of come together and bring stuff to the table. So anybody have any questions or anything you guys wanted to go over, or everything makes sense? Are you guys ready to rock and roll for the week?
Oh yeah. This is Devin. Just one question. Around straddling.
Yes.
So the question I had is around earnings reports. So do we want to straddle a stock leading up to earnings, or is it better, to wait after earnings to perform a straddle? Leading up to earnings is mainly that creates a lot of volatility, but then I think you had mentioned earlier about glitches and so forth. Things that'll keep the stock steady, which we don't really want that for straddle. But just wanted to get some insight around that, a little bit more specifics.
Oh yeah, definitely. Yeah, so earnings, we always have to remember that these are a lottery play because of the glitches and things. If things don't go according to plan, both sides can easily be devalued. So that's why we always go light on a lottery play. We always go heavy on the top 5 because everyone else is following the money. And there's a reason for that, because those are the ones that maintain their value, meaning less time depreciation. And in the options world, they are very, very volatile. So if there's a little bit of a price movement with the share, there's a lot of movement in the options world. And that's why a lot of investors and traders trade on those top 5s regularly, meaning like Apple, Amazon, Tesla, AMD, and Nvidia. But for earnings, there's several different ways we can take advantage of that. So that way we're not affected by the IV crush, which means implied volatility crush, which would happen after earnings. So meaning where we can maybe straddle days before, but on a daily basis. Remember, always trade, always be trading, not holding. And so getting in and out, and just take advantage of the volatility, and up until the earnings. But if we're more certain that, like let's say United Airlines had what was it, 86% an earning, or expecting an earnings beat, we can still utilize that as a lottery ticket to buy calls on, maybe not puts. Because and even last week, a lot of the airlines did very, very well, so it's anticipated that United Airlines is going to do the same thing. But in case things don't work out, the money is lost. It wasn't. We didn't invest very heavy into it in the first place. But another way to take advantage of earnings is to maybe straddle their competitors rather than straddling the exact one with the that's scheduled to be released, but maybe like the ones that already have their earnings, like or whatever. We can take advantage of that because because they all kind of affect each other. So in one way or the other, and so that way we're not affected by the implied volatility crush after earnings. So that is a great way to really avoid that, but also taking advantage of what's scheduled to happen.
Got it. And then my next question was also around straddling. Would you recommend straddling the same stock multiple times a week, or is it like maybe you do something on E&D on like a Tuesday that expires on a Friday? If things went in your favor, would you turn around and maybe do another straddle like the next day or Thursday? Just wanted to get your thoughts around that, or is it more like straddle one stock once per week? If you have success, then move on to the next kind of thing.
So a lot of pro traders and investors, they trade the same stock. A lot of them may just trade one stock option over and over, and it could be Apple, it could be Tesla, or Amazon, or all three. And so, but we do want to keep a certain limit. We don't want to overdo ourselves. We want to make sure things are manageable. Because if we choose one, we really have two sides. We have calls and puts that we have to manage. If we have three straddling that we have going on, really we have 6 areas we have to delegate. And so if we kind of start going beyond 3 straddling situations, it may throw you off a little bit, even though a lot of the market kind of moves together with each other. But in some cases it may not, especially with earnings, how one kind of affects different industries and stuff. So we may see different industries going in different directions. And so, but we can see that, like with Apple, we're seeing the options where we can buy. But we can see that the calls with Apple, because we can see Apple, their share price is right here in the middle. Apple 138.38 down 3%. But we can see that the calls are on the left side and the puts are on the right side. Now the calls were down about 54%, 51, 57, whatever. But the puts were greatly up over the calls. And so a lot of investors and traders will just trade the same exact thing. Why try to fix something that's not broken? And so all the majority of the volume are on the open interest. It helps maintain the value, meaning the least amount of time depreciation compared to other ones that aren't as high. And so those ones will have more time decay. And it could be other stocks that are just kind of that we just don't hear much about, and so or if we go to Amazon, let's see Amazon here. We look at Amazon. So Amazon, we have calls that are down 50%, 60%. We have puts that are up over 100%, over 191%. That's why I always say you can only lose what you put on one side, but your gains on the other side are potentially unlimited. So they can easily wash out the loss on one side and it puts you ahead. So it does not matter if we're going in the next day, if the stock market surges straight up or plunges straight down, it's in our favor either way. And so, but it's a strategy that we can utilize every day, every week, every month. It does not matter what type of market we're in, whether we're in a bear market or a bull market. And it's consistency. We don't have to change our strategies. It's something we can do over and over and over again. Unlike most other investors and traders, when the market does change, it takes them a long time to acclimate. And when they do, it's because they lost a ton of money. And we don't want to be in that position. We always want to come out ahead. We don't ever want to lose. We want to gain every single day. And this is the best way to try and do that. And but yeah, so financial earnings, yeah, that's just like I said, lotteries, and then yeah. So hopefully that was able to answer that question. Anybody else have any other questions or anything you wanted to go over? Everything makes sense? You may have to unmute your mic. Oh, good. Well, it sounds like everything makes sense. No questions. We're looking good. We're ready to rock and roll. I'm available 24/7. Anytime you guys have any questions, feel free to message me in the chat room, as a group, or whatever. Anything you guys have, just stay in touch. We're ready to rock and roll, and yeah, we'll see you guys next week.